A big TGIF from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance executive editor Brian Sozzi. You're watching Phoenix Education Partners ringing the bell at the New York Stock Exchange. Jefferson Capital getting trading underway over at the NASDAQ. It's government shutdown day 10, and as you would expect, there remains no resolution in sight to this political gridlock. Absent government data, that has left investors this week to take their cues from the start of earnings season and various bubbly AI news. Markets are poised to end the week at records as earnings this week from Delta and to a lesser extent Levi shed light on a resilient U.S. consumer. So good thing we still have companies out here reporting quarterly earnings, at least for right now. Let's head down to NASDAQ and check out Yahoo Finance senior reporter Brooke DePalma, see what's hot in the markets in the early going. Brooke.
Good morning, Brian. That's right. We're here at the NASDAQ here in Times Square, and I can't even believe it's government shutdown day number 10 because markets have largely shrugged this government shutdown off as that AI tech rally really does contain and continue its momentum. If we take a look, all three major indices now opening up in the green this morning. The Dow leading the charge at the early innings here, up about 0.2%. We are still off that 52-week high, though. The NASDAQ also holding on to some momentum, hovering very close to that 52-week high. The NASDAQ now about 30 points higher at the open, and the S&P 500 slightly behind, but still holding on to some gains here, up about 0.1%, 8 points there, but still, once again, slightly towards or slightly near that record 52-week high. I also do want to take a look at one specific stock that I have been watching really closely this morning, and that is Levi's. It was set to come in under pressure this morning as investors really weighed that report that they came out with on Thursday afternoon. Now, the company did beat on both the top and bottom line, but what got investors worried here is that they put out this really prudent guidance for the fourth quarter. They said they only expect organic net sales to increase about 1%, whereas in the third quarter, that company saw a 7% increase in organic net sales. And so that prudent approach to the year end, especially the holiday season, has investors a little worried this morning. So we'll keep a close eye on that. It's now down about 10% in the early innings here. But I also do want to take a look at the NASDAQ because we've been seeing such momentum within that trade as well. And right now, the NASDAQ on this Friday morning opening mostly in the green. We are seeing NVIDIA mostly flat. That has held on to some momentum this week. Google, Apple, Microsoft also mostly flat, but certainly taking a step back. Once again, all three major indices pointing to more momentum today as they're all in the green, with the Dow really holding on to the momentum up about 0.3% this morning.
Levi is saying on their call last night the baggy dad pants still a hot seller. I mean, it's tough. You can't even really run fast in these things, but maybe that's not.
Baggy denim is back, Brian.
It is. I'm just too old.
Back.
I'm too old to like it. All right, Brooke, we'll get you back here in a second. If there's one theme in markets this week, besides me being old, it's something the Yahoo Finance team is calling the everything rally. It's defined by investors getting sucked into rising asset prices across the board with an associated fear of missing out, or FOMO. Valuations on stocks are generally being ignored out of concern for not cashing in and on an assumption of more interest rate cuts. Long-term considerations on hard assets like gold are also being ignored simply because it's the of-the-moment asset class. Check out what we've witnessed this week alone in markets. Gold prices have broken through $4,000 an ounce and continue to hover near records. AI chip darling NVIDIA has climbed to new records, outperforming the Dow and S&P 500 easily this week. Easily. Bitcoin also continues to hover around all-time highs. Now, are there cracks starting to emerge in this everything rally? Perhaps gold, NVIDIA, and Bitcoin are still off the highs this week, but there doesn't appear to be strong cases being made by the bears that warrant lightening the load on risky assets. Here on the opening bid roundtable, we'll chat about all this. Katie Kaminsky, Alpha Simplex Group Chief Research Strategist and Portfolio Manager, and Yahoo Finance Senior Reporters Brooke DePalma and Nesfrey. Katie, coming to you right out of the block here. How much longer could this everything rally continue?
This is a good question because honestly, there's very little that could go against this rally at this point. We don't have any data coming in, so it won't be that. But I would say that we need to see something much more seismic to actually spook the markets to a point where we don't see things as just everybody getting in that trade. Are you seeing, I imagine you study a lot of charts, you're watching things very closely, the market action. Are there any red flags that are starting to emerge? You know, I mentioned here, if anything, we're seeing like an NVIDIA, crypto and a Bitcoin off the highs, but maybe I'm reading too much into it. Well, this is a good point. I was watching the market action very closely yesterday because you saw sort of a reversal, but you saw recovery towards the end of the day, which means that people are buying the dip even when there seems to be profit taking. And so that is one thing I've been noticing. But also, I like to look at other asset classes. And if you look at gold, it's really sort of seen as a hedge for if everything goes wrong. So I think that is interesting as well, that you see this really strong view on precious metals. It's sort of a worry about inflation risk that's offsetting this all systems go view on equity markets at the same time. So I'm watching those other asset classes right now.
And as I think back, and I think you may have predicted this move in gold when it was about $2,000 an ounce, so the floor is over to you. What are you seeing this week in gold here?
Look, yeah, yesterday we saw gold dip a bit, but today it may be starting to be in a consolidation period. I mean, 4,000 is a hefty number. We were seeing a squeeze in silver, by the way. Silver is up 70% year to date. It has outperformed even gold. As far as the debasement trade and whether it will continue or not, look, what I'm watching more is the U.S. dollar. If we see a rise higher, substantially higher in the U.S. dollar, then you could start to see things breaking. I mean, that's the dollar being in a downtrend has been lifting the precious metals. It has been lifting equities in general, the Fed easing. And by the way, the Fed is expected to cut again this month. It could cut yet again. The Fed now is sort of without this data that it has, and with the government shutdown, it's expected that the Fed will have to continue easing because the government is such a big spender as well. So you could see the labor market keep deteriorating, and that is going to keep goosing the economy, so to speak.
Katie, back to you. Is this just the Fed rate cut rally?
That's a good question. I mean, I think it's much more focused on growth. If you looked at the GDP numbers, that I think got people very confident about the economy being in a better state and headline risk actually being lower. So I think even though initially and a few months ago we were really focused on rate cuts is just another positive contributor to overall optimism that things are sort of all systems go. So my view is it's not really just a rate cut story, it's a little bit of both.
Brooke, I'm about to end this week totally confused on the state of the consumer in this country. Delta, they said earlier this week that sales have accelerated the past 6 weeks. That's good. PepsiCo said lower income consumers are still not buying enough snacks. And you had Levi's come out here and warn for its current quarter, despite them having a good quarter.
Yeah, it's definitely this tale of two stories. Delta Premium, it really caters to this higher end consumer, and that's who's really holding up this economy. They continue to spend, they continue to go out, and they're willing to splurge where they can. And then on the flip side, you have this low income consumer who's really strapped for their dollars. They're looking for budgets and affordable options wherever they can. And also that's bleeding into the middle income consumer as well. They're spending less on their credit cards, but that high income consumer really holding up the economy here by be willing to spend on these certain things. But at the same exact time, you see everyone looking for a bargain right now. That's why Walmart is doing so well in this environment. And even actually on Levi's call last night, they mentioned something about Levi's Signature, and that's actually their more value-oriented, affordable option that's within those mass retailers, including a Walmart, and that grew double digits. And that really is a telltale sign that it's just about everyone looking for a good deal right now.
No, it's a good call out, Brooke. Yeah, that was an interesting mention on that call. Inez, what is interesting is that we have gold hitting new record highs and Nvidia still outperforming the market. If we were having this conversation a year ago, 2 years ago, you would think Nvidia would be down at the same time gold, the safe haven play, is going up.
Yeah, I mean, this truly is the everything rally where everything is going up, as you mentioned. NVIDIA near all-time highs. You've got XLU, XLC, XLK at highs. So all of this, the sort of the cornerstones, the touch points of the AI trade is powering everything. And, we talked a lot this week about, is this a bubble? Is it not a bubble? Goldman Sachs thinks it's not a bubble yet. These companies have very strong balance sheets. UBS saying the same thing, saying stay engaged because CapEx, AI global CapEx is going to grow 67% this year compared to next year. And they're advising to buy the dip. The issue is that there have been very few dips to buy.
Katie, then what's the playbook here? Is the reality that it's okay to chase stocks?
That's always a good question. I mean, I think the problem is the FOMO trade is real. If you see that growth is strong and that things look positive, it's important to stay in the market and follow these moves because there doesn't seem to be any sort of indication or any sort of fundamental data that goes against it. My bigger concern is much more of an overstimulation narrative where the economy pumps up too much and then you start to see inflation pop up as well, so upside risk in there, and then it could cause a little bit more turbulence. But I think that will actually take time to materialize.
You're involved in these markets, Katie. Why are you and your colleagues and many other financial pros, why is this government shutdown not a big deal?
Oh, that's a great question. I mean, I like to ask myself that as well, because, I mean, you'd think that, this has a huge impact. It does have a huge impact, but I think the market broadly shrugs that off and doesn't react as much. So I think we're also shocked because we've had so much headline reaction this year that now we're suddenly surprised that the market isn't reacting as much to this particular information.
Inez, what's the one or two big things you're watching for next week?
I'm going to keep watching crypto because we're seeing Bitcoin at around 121. We've got strategists that are saying that by the end of the year, it's going to get higher. And we are seeing also some strategists talking about sort of a rotation that's supposed to happen from analog gold to digital gold. So I'm going to be watching to see if that starts to play through.
Katie, the bank earnings out next week, JP Morgan, BNY, they should be pretty strong, no?
I would think so. We'll have to see, but I think there's just not, depending on the data, we'll have to see earnings data next week, but there's not going to be as much macro data, obviously. So I think those could be interesting just because we're not really getting all the rest of that data.
Brooke, last word to you. What's on your radar here?
Well, certainly what's on my radar is I do want to hear from those banks to get that consumer breakout on how different income cohorts are spending. And I do want to point out, because what I heard from Bank of America in a note on the consumer checkpoint is that actually as the S&P 500 moves higher, that allows middle income consumers to be able to spend more in this sort of environment. And so I would wonder if these markets do continue to go higher, if we see inflows continue into this market and continue this momentum, will that allow some free capital for these middle income consumers who have been stretched, who have been weary, who have been really picky and choiceful? Will it allow them to go out to spend, especially as we approach those holiday seasons? And also consumer sentiment out at 10 a.m. today. I'll be looking out for that too.
All right, well, good stuff here, guys, and have a wonderful week. And a big thanks to my opening bid roundtable, Katie Kaminsky, Brooke DePalma, and Inez Ferre. Appreciate it. All right, the government shutdown is on day 10. What will get the issues resolved and the government reopened? Connecticut Governor Ned Lamont stops by into our Power Player slot to offer up a few suggestions. All right, welcome back to Opening Bid. I've been checking out a bullish note today from Goldman Sachs on Disney. Disney this week implemented price increases across its U.S. theme park tickets, annual passes, and Lightning Lane services at both Walt Disney World and Walt Disneyland. Blame rising labor costs and ongoing park expansion initiatives. Goldman sees the price hikes as helpful to the amount being spent in Disney parks and, as a result, its overall sales. The analysts covering Disney are reiterating their above consensus EPS forecasts and a buy rating on stock. Price target, $152. All right, the government shutdown is on day 10 with seemingly no end in sight. At the same time, signs were building into the shutdown that the U.S. economy was slowing down. That was mostly showing up in lackluster jobs reports and weakening consumer confidence reads. Let's welcome back on Connecticut Governor Ned Lamont to chat about all this. Governor, good to see you. It has been a while. Thanks for hopping on here. Look, day 10 of the shutdown doesn't appear to be we're getting any breakthrough anytime soon. What will get this resolved?
I got to tell you, Brian, governors on both sides of the aisle are pretty aggravated right now. We have to pass a budget. We have to do it on time. It has to be balanced. We get that done. We have a partnership with the federal government. We can't shut down. I can't send home corrections guards at the prisons. I can't send home teachers. I mean, come on, guys. So what gets it done? I think they're very close if they can just get this negotiated. You don't want to see people's health care costs jack up. I've heard that from Republicans and Democrats alike. The timing of whether you do that now or do that after the shutdown, you guys can figure it out. Get it done.
What type of impact is the shutdown having inside of Connecticut?
We did a total analysis of where we get hit first. Number one was women, infant, and children. The program called WIC that gives you, a little bit of money for all those newborn kids, formula and the such. There, the state has had to step up and say, we'll backfill until the federal government comes in. The biggest one is going to be SNAP benefits. That's the band formerly known as food stamps. That's about $72 million a year if that cuts off. We have in reserves take us through the end of October. So I really hope the feds can figure it out over the next less than a week.
Governor, from the outside looking in, and so many of us, we see the inability to get the government reopened. What is driving that stalemate? Why aren't the parties working together?
I don't know. The Republicans have the presidency, they have the House, they have the Senate. You think they could, rally the troops, find something that gets those last few Democratic senators they need to get it over the finish line. But they got to take the lead on this. I think the House Republicans went home on vacation. You can't do that. You got governors here trying to keep the ship of state afloat and moving forward. And this is just incredibly disruptive in people's lives.
Assuming this continues for several more days, several more weeks, it's unclear, Governor, what type of protocols or things you have put in place inside of Connecticut, to backstop any economic effect?
Look, I have to remind people, I cannot pick up all the shortfall of the federal government if they, stop paying their bills. I mean, Medicaid, for example, is enormous, but I think that keeps going for now. What we've got is we do have some reserves just for situations like this, or in terms of a recession. We maybe are going to set aside a little bit of extra money, but again, I can take care of the most vulnerable and patch until the federal government gets its act together. Get your act together.
Switching gears a little bit, Governor, recently you made some comments on another network about the mayoral race here in New York City. What are the ramifications for that race? Of course, you have a lot of Wall Street people inside of Connecticut. What are your thoughts on where the situation stands?
Yeah, I was at the Greenwich Economic Forum, and I just pointed out that New York City is the financial capital of the world. And we are a big part of that, especially Southern Connecticut, big part of that same ecosystem. So New York City's success is our success, especially when it comes to finance and Wall Street. So I want to make sure that the next mayor of New York City takes into account how important finance is to the future of the city and the future of our region.
Is your concern that if Mr. Mamdani gets in there, that he cuts jobs or he just makes it so hard to operate in New York City that has a blowback on your community?
Look, there's a risk of that. Or for him, there's a risk that some of those folks in New York City say, hey, maybe I want to come to Connecticut. It seems to be a more stable environment. I tend to think that watching Mamdani's campaign, I think he's a pretty balanced guy. I'd like to think that if he gets elected, he'll work through these things.
We've been talking about the economy nationwide, Governor, really all week. It's what we do here at Yahoo Finance. Things seem to have been slowing down ahead of the government shutdown. What have you seen in Connecticut?
That our income tax revenues are still pretty strong. Our sales tax revenues are getting flatter, and the employment market is softening a bit. Overall, our economy in Connecticut is quite strong. We have, a lot of advanced manufacturing, some of it related to the military, submarines, helicopters, jet engines. That's all very strong. Healthcare is still very strong, but I do see some softness in the labor market.
Mark Zandi, noted economist over at Moody's, recently came out with a report, Governor, noting that Connecticut is at high risk of recession. Do you see that?
Look, I really don't. I did read that. Like I said, we've had 7 balanced budgets in a row. We've got a surplus. We're paying down our debt. We have strong anchor tenants in advanced manufacturing and fintech and healthcare. They seem to be going pretty strong right now. I kind of like where we're with. And just in case, I got a $4 billion rainy day fund.
Governor, we haven't talked to you since the signing of the one big beautiful bill, whatever you want to call it. As you look into next year, how will this bill impact the economy in Connecticut?
what it hits hard is Medicaid for us. And what that means is that they could potentially yank, say, $1 billion of the federal match. That would be impactful for our hospitals, really impactful for rural hospitals, and really tough on patients. They're going after Obamacare pretty hard, where they take away some of those subsidies, which would drive up healthcare. Right now, I particularly worry about the impact is on our healthcare system and our hospitals.
How much do you anticipate healthcare costs will be going up next year then?
Look, on the exchange, if they don't get that act together as part of the government shutdown, you could see folks on the exchange could see their costs go up by $1,000 a month. A big hit. Everybody's talking about affordability. Don't do that to middle-class families.
And have you been able to, of course, President Trump has been out there really all year long trying to get more companies to make products here in the United States. In some cases, he has found success. Has that success or those efforts benefited Connecticut at all?
Look, we certainly have put together a fund. If any foreign companies are thinking about coming to the United States, maybe they're in the supply chain of Pratt & Whitney or EB. We've had some interest there. I've seen on the other side of the aisle, though, Brian, we had a big international company called Ørsted building a $5 billion offshore wind project. And there the Trump administration pulled the plug on them until a lawsuit turned it back on again. There they were putting $5 billion investment into offshore wind right off the Connecticut coast.
All right, we'll have to leave it there. It's always nice to get some time with you, Governor Ned Lamont. Have a great weekend. We'll talk to you soon.
Nice to see you, Brian.
Appreciate it. All right, I am off to Dreamforce in San Francisco next week. That, of course, is the software bash put on by Salesforce co-founder and CEO Mark Benioff. Dreamforce comes at an interesting time for Salesforce with its stock down about 28% this year. My big Dreamforce interviews kick off on Monday. We got Benioff, we got Brian Niccol over at Starbucks, Tom McKinnon over at Okta. It's going to be a fun week of chats. And on another note, coming up this Monday on my Opening Bid Unfiltered podcast, I sat down with GoFundMe CEO Tim Cadigan, former Yahoo team member. Really interesting. He tells me the economy is so stretched, people are aiming to raise money to buy weekly groceries. Yeah. Coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market moves, the trading day. We'll be right back.